Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. So far this week, I have already talked about cheap stocks to buy, but if you watch that video, I described cheap as being on a discount. So these were all stocks that were down like 20, 30, 40. I think even one of the cruise stocks is down like 60%. So these were all at discounts. So that's why I described them as cheap. But a lot of people have been asking me to talk about cheap stocks dollar amount wise. So I've been spending this week trying to put together my 5 favorite stocks that are all under $25. And so I've talked on this channel that I don't think price is as big of a determining factor for what people should be investing in anymore. But for someone like myself that does like trading options, that is like the one reason why I do like cheaper stocks. When you have cheaper stocks, you're able to afford the options that require you to be able to buy or sell 100 shares. And so these stocks under $25 means that with $2,500, you're able to buy and sell these options. So that opens up a lot of different opportunities for people that want to invest in the stock market. So in today's video, I'm going to be talking about the 5 cheap stocks that I really like that are under $25 right now. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it. Hit the like and subscribe button, as well would help my channel out a lot. Also, if there's any stocks that you like that you would like me to go over in a future video, be sure to leave them in the comment section down below. I've been responding to all the comments, and I am working on videos to incorporate all of them. So with that out of the way, let's hop on to the first stock on this list, which is going to be Plug Power, ticker symbol PLUG. Currently, Plug Power is trading for $24, and it's up 661% on the year. This is actually one of the first stocks that I talked about on this channel when I kind of made the switch to making this kind of a serious channel. This is when I was talking about the top stocks on Robinhood, and Robinhood has always given Plug Power like 100% buy rating. And when I talked about that in that video, that probably was like one of the first videos that I ever made that had more than 1,000 views. And anytime it has an earnings report, I always see a spike in views. But I saw an article a couple weeks ago talking about why Jim Cramer really loves Plug Power. And Jim Cramer is a Wall Street personality that I really respect. So because of that, I decided to put it back on this list. And doing a lot of research on it, I feel very bullish about the company. So Plug Power is a hydrogen fuel cell company that mainly focuses on replacing batteries in a lot of vehicles and different machinery. And so this is a stock that has been around for a long time. They have been a publicly traded stock for over 20 years at this point. And while I have not really talked very positively about them in the past, in yesterday's video, I was talking about 2 of the major oil stocks. I talked about Chevron and ExxonMobil. And in that video, I talked about how these oil stocks are probably going to keep declining for the next 50 years. And I've been talking about how green energy stocks are some of the best buys in my opinion, and Plug Power really fits that. And that's one of the main reasons why I decided to add it to this list. So from the numbers that I could find, this industry for hydrogen fuel cells is expected to grow to a $5.5 billion industry by 2026. And that would mean that it has a compound annual growth rate of 17.3% during that time. So this is a company that's been around for a long time. They're pretty good at what they do, and they have very nice growth when it comes to their overall market. So looking forward, this is definitely a stock that I would happily buy for a long-term position. While it's had some struggles, and we'll talk about that with the recent earnings report, I think the future for this market is very bright. So the stock did have earnings last week, so let's talk about it. And it had better than expected adjusted results. They did post a net loss of $39 million, which is larger than the $18.2 million from a year ago. And while that does seem bad, the company's had a revenue growth of 80% year over year. So kind of as I mentioned, the revenue is starting to take off. And while they've posted a bigger loss, that growth for a long-term investment looks very positive. And their new orders doubled year over year, and they also increased their full year guidance. That's kind of one of the main reasons why this stock has been on a tear so far in 2020, being up 660%. This company is one of the faster growing stocks that I've seen in a while that's expected to increase significantly in the market in the next 6 years. Because the company has had such a successful 2020, they did have a stock offering on Monday to raise between $750 and $860 million in cash by selling $38 million of shares at the price point of $22.25. And so this was a great way for the company to raise capital, but that did result in the stock falling pretty significantly. It was around 10%. The reason behind that is anytime you offer more shares, it dilutes the value of each of the individual shares because the market value for the company doesn't really change. So anytime you add more shares, decreases the value with all the rest of them. But the company is up 660% still this year, and it was a great way for the company to add some extra capital and some cash. And so some of the red flags that I have seen with the stock, the first one comes from they've been around for 2 decades and they've never posted a full year of profit during that entire period. Also, they burn $180 million in cash per year, But with the stock offering, you don't really have to worry about the company going bankrupt anytime soon. And based off of that crazy revenue growth that we've seen and the projections for how big of a market there's going to be by 2026, I'm very bullish on the stock long term, even though some of the fundamentals don't look that great. So with that out of the way, let's hop over to the computer and I'll talk about what I see on the charts for Plug Power, ticker symbol PLUG. Okay, so here we are starting the video off with Plug Power, ticker symbol PLUG. As you can see, this is only the 5-day chart and this stock has a lot of movement. This was the huge sell-in when it was announced after hours on Monday that they were going to be having a stock offering, which dilutes the rest of the shares and pushes the stock price down. But since that moment, it's been steadily climbing. Normally, I don't start on this short of a time frame, but the reason I did is because when we jump back to the, we'll go to the 180-day chart first. You can see that it has grown significantly from a low of $2.53. Let's see, when is this? Back in March, and now it's at $25. So this is a stock that has really taken off recently, and while the earnings have been pretty good, they're still operating at a loss and they haven't had a full year profit in their over 20 years of existence. The trend is in the right direction. This is a very speculative stock and the share price kind of shows that. So there is some risk associated with it. What I'm seeing here is it has bounced off the 200-day moving average a couple times, and that could be used as a support, but at this point it is so far away from the 200 that I'm not really watching that. When I go back even further, you can see how for the longest time, you can kind of see why I've been pretty bearish on the stock for a while. It has just kind of been flat. It's had some tough earnings, but recently the stock has just gone to the moon. So is this the best deal to buy in right now? No, but it is a cheap stock that's under $25 that has a lot of upside potential. It does have plenty of risk when you just zoom in on this area right here. It's not the, we'll go like here. These are a lot of major green candles in a row. So not something that's going to be a discounted stock, but if you're thinking long term, and I kind of am, I think the green energy and hydrogen fuel cells are very attractive. So I'm going to put Plug as a hold/buy based off the technicals. Not my favorite, but based off of the trajectory of the company, I'm a big fan. Next up on this list is going to be Sonos, ticker symbol SONO. Currently Sonos is trading for $21.50 and it's up 38% on the year. If you've been around to the channel for a bit, you'll know that Sonos is probably my favorite stock on the stock market right now. I've made videos talking about why I thought the stock was going to double in 2020. I am currently a shareholder, but I will probably not be a shareholder by tomorrow. I'll explain that in a video next week. But Sonos, for people that don't know, makes very high quality speakers, and they've been able to take a lot of the market from some of these huge players. Some of the other companies that are in this market are, you have stuff with Microsoft, Apple, Google, Amazon, and somehow, probably because they have such high quality products, they've been able to take market share away from some of these giants. Anytime you go against these tech giants, I would never expect a company to do very well, but this is one of the examples of a company that's very good at what they do, and they're not really trying to sell to the same type of people. These speakers are not super cheap, and something like an Alexa is a very cheap product to have, and so they're not really targeting the same people, and I expect Sonos to continue to take market share the longer this company is around. There were some comments on my stock portfolio video towards the beginning of this month talking about how I was short-term bearish on the company. And I want to point out that you can be short-term bearish based off of what you see on the charts and still be long-term bullish. Based off of what I saw, the stock was getting close to a resistance. And when we hop onto the charts, I'll talk about why I felt that way and how I still feel very bullish on the company, even though I was wrong about being short-term bearish. And so the reason I was wrong is that yesterday they had an amazing earnings report and the stock skyrocketed. From that report, revenue increased by 16% in the last quarter, and this was after the stock fell in earnings the previous quarter because they had a revenue drop with problems based off of not having enough inventory and having some problems with manufacturing. They also raised their one-year guidance with an expected annual revenue of $1.5 billion that would represent a 15% annual growth rate when it comes to revenue. And so this is a company that is continuing to expand. This is a stock I feel very strongly in, and I still think it's one of the best stocks out there right now. But with that out of the way, let's hop on the computer and I'll talk about what I see with the charts for Sonos, ticker symbol SONO. Okay, so here we are talking about Sonos, ticker symbol SONO. When I talked about my portfolio video at the beginning of the month, someone pointed out after the earnings report yesterday that had the stock spike up, which I've kind of excluded from this at this point. They pointed out the fact that I said that I was bearish. What I meant by that is I was short-term bearish based off of the price movement. You can be short-term bearish and still be long-term bullish on a stock. Based off of what the charts were telling me, the $16 mark was a very solid resistance, and the stock has struggled to break through that. Once, twice, 3 times, 4, and it was coming up a 5th time. So I was feeling pretty bearish based off of the price movement. But one of the ways that I've always said that you break through a resistance or a support is a catalyst, like an earnings report. And so when I zoom out a little bit, yeah, you see that it gapped up all the way up to here. It's getting pretty close to its all-time highs from right when it IPO'd. And so with this giant gap, I am looking for a gap fill. So while these shares are going to be taken away from me pretty soon, I'm not looking to buy in at this point. I would want it to come back and make this a gap fill, because this could be a support right here. I'm going to set an alert to see if it comes down to this level, because right now it is pretty extended, and based off of the price movement, this major gap up, I'm going to wait for it to come back out of the sky. But I am still long-term bullish on the stock, even though I am short-term bearish still. All right, the third stock on this list is going to be General Electric, ticker symbol GE. Currently, GE is trading for $9.60, and it's down 14% on the year. Throughout this week, probably the most recommended stock that I've had has been GE, so I decided to finally put it on this list. If you've been on this channel for a while, the few times that I have talked about GE, it hasn't been a lot of positive stuff. Some of the common things that I usually say about GE is that I don't like the company because it seems like they have their fingers in too many businesses that they don't really excel at. Like they don't do anything really well, which is kind of the opposite of something like Sonos, which only really makes one type of product, but they're really good at what they do. But recently, I have been seeing a lot of positives with GE, so I decided to put it on this list. Recently, GE has gotten a big boost from the vaccine news, but as I mentioned, it is still down 14% on the year. So here's a graphic of GE's revenue sources, with aviation being the top, and then a rung below that, you have healthcare, power, and renewable being pretty similar in price. Aviation is supposed to be getting a boost once the pandemic goes away, similar to a lot of the airline stocks, have not been in a great spot right now. And since we talked about Boeing a couple days ago, similar, GE makes a lot of the engines that go on these planes, and since companies aren't buying new planes, that market has kind of shrunk at this point. So while it's not having a great time, I expect it to bounce back in the next year and a half. From their last earnings report, they did say that GE Aviation, their operating profit dropped almost 80% and their revenue dropped 39%. In addition, around 26% of the global fleet of planes are parked, and that has hit their plane servicing revenue. They've also been lowering their workforce with the intentions to cut $1 billion in costs on the next year. And so for a company that's kind of struggling financially, it is always kind of what you expect. You cut jobs, you try to lower as many costs as possible, and being a potential shareholder, that's what I like to see, because the company has really struggled with their books in the past couple years. But the thing I'm most excited for has to do with renewable energy, which is similar to what I talked about with Plug Power. This market is going to continue to expand in the upcoming years, and GE seems to be in a very good spot for that. 2020 was expected to be a record year for wind turbine installations, and GE would take full advantage of that. More recently, GE did win a contract in Lithuania to build some wind turbines. The deal includes 26 wind turbines, and they will be providing operational services for the facilities for 25 years. So at this point, I'm feeling more bullish about GE than pretty much ever. I think the renewables is going to be a huge boost for the company going forward. And once the pandemic eventually finishes, the aviation should get back to where they were. That is probably the most profitable part of their business, but the growth that's going to come from renewables and their energy, I think gives a lot of hope for the company to rebound. So while aviation revenue has fallen 39%, as I mentioned, it was offset in the last quarter by gains from their renewables and their power. But as I mentioned, it is down on the year, and when we hop on the charts, I'll show that it's been a long time coming with this decline. So with that out of the way, let's hop on the computer and I'll talk about what I see with General Electric stock, ticker symbol GE. So here we are looking at GE. As you can see, this is the 180-day chart, so I've kind of scaled down the scope that we're looking at. This, in my mind, for the entire time that I've been investing in the stock market, I've always thought of this stock as being valued between like $8 and $12. In the past 6 months, it has fallen down to a low of $5.50, but it started to climb. We're seeing some very positive things. We saw this golden cross here, and it's been moving above the 50-day moving average for a while at this point, so it seems very bullish. But some of the hesitancy that I have with this stock is when you show the all-time chart. This is a stock that has fallen significantly in the past couple years. As we go back, it had recent highs of $30 back in 2016, and it has pretty much fallen off a cliff since that point. So I don't have really anything charted, but based off of the restructuring of the company, they've been cutting a lot of costs with the pandemic, and the significant discount that we're seeing with the stock. I kind of like this for a long-term play. I'm very excited about the renewable energy stuff, kind of a similar reason why I like Plug Power. I think this is a huge market going forward, and they seem to be poised to take advantage of that. I've always said that they kind of have their fingers in too many different types of industries, and it seems like they've been cutting back on that. And with the pandemic, hopefully going to be finishing up in the next year. The aviation business should come back, and the green energy is looking very good. On the long-term chart, it looks like we're about to get a golden cross. It looks very bullish to me overall. And so I'm feeling pretty good about GE on a long-term basis, but I am a little bit hesitant because of this just catastrophic meltdown of the stock price in the past couple years. Next up is going to be one of my favorite stocks. It's going to be Zynga, ticker symbol ZNGA. Currently, Zynga is trading for $8.11, and it's up 32% on the year. Zynga has been one of my favorite stocks of the year. It was a part of my portfolio for around 6 months during this year, but at this point I have sold, and I'm likely going to be buying back in, and I'll explain why. And so for people that don't know, Zynga is a mobile games company, and they really took advantage of the stay-at-home movement with a lot of their mobile games, which are free to play, but they do have the purchases that are available in the apps, also with a lot of ad revenue going with those different games. They did have their earnings report 2 weeks ago, and while they saw some great numbers, especially from my favorite metric, which when I talk about video game companies and social media stocks, the things that I'm looking for are the daily and monthly average users, because I want to see growth in those metrics more than pretty much anything else. They did show some great growth with 31 million daily active users and 83 million monthly users. But the report pushed the stock down around 10%. And some of the reason behind that is that they had a record $503 million in revenue, but it was much lower than the $627 million that was kind of expected them by analysts. And so while that does not look great, I've talked about on this channel the stocks that have done very well during the stay-at-home movement. I feel like they get given unrealistic expectations for how well they're going to do. And so while the company did miss out on the expectations, those is a 46% increase in revenue year over year. So this is a company that is still growing at a crazy rate. It just didn't live up to the expectations set by these Wall Street analysts. And they did have a net loss of $122 million. Their outlook was a little light, and that might have spooked the market a little bit, but every price target that I've seen for the stock has been between $12 and $15, and considering the price right now is at around $8, this seems like a great deal. It's a stock that I love, and in my mind, the stock should be trading between $9 and $10. That's kind of how I've owned it all year. And so seeing it at the $8 mark is very attractive, and once my Sonos position ends this week, I'm likely going to start my options trade on Zynga all over again. The revenue chart is pretty beautiful, as they've had some major increases in revenue year over year in the past couple quarters. And so I love the long-term potential of this stock. If we go into more lockdowns, this is a stock that's going to do very well, and I think the potential of Zynga is so bright. So with that out of the way, let's hop on the charts, and I'll talk about what I see with Zynga, ticker symbol ZNGA. Okay, so here we are looking at Zynga, ticker symbol ZNGA. As I mentioned, this is one of my favorite stocks that I've traded in the past year. I made a video kind of explaining how I made a profit on this stock, even though it fell like 12% since I owned it. But at this point, we had a miss on their last earnings report, and it has fallen. When I had thought about the stock, I had normally been trading the wheel strategy as the stock was kind of bouncing around between $9 and $10. And with this recent fall, it is below the 200-day moving average, which is the first time it's been under that in a while. Normally, I would call that pretty bearish, but if you are very bullish on a stock overall, I would call this a deal. I'm going to be waiting a little bit to see what happens in the next coming days, because the stock seems to be kind of horizontal at this point. So if we can break above that 200-day moving average, I'm probably going to be buying into the stock again. I think it has incredible value, and I just think that the expectations were a little bit too high based off of the success that the company has had during the pandemic with the stay-at-home movement. So I'm still very bullish on this long term. We can see the incredible growth this stock has had in the past couple years. So it has the track record of looking like a fantastic investment. When we go, let's see, when did 2020 start? It started the year back at $6, and so it has grown significantly. Obviously, it is below the highs that it's seen so far this year, but that gives a lot of growth to the upside. I love this company, and I think the technicals look fantastic for a long-term play, considering it has a track record, which is not something that GE can say. Even though it looks attractive on the short term, Zynga looks attractive on the short term and the long term. And so the last stock on this list is going to be Turtle Beach, ticker symbol HEAR. For people that don't know, Turtle Beach makes some high-quality gaming headsets, and a little throwback is that I originally started this channel back in like 2013, I believe, and I was a gaming YouTuber. So back in my day, the headset that I used was the Turtle Beach X12s, and it has been a product that I've always loved during my entire gaming career. The black and green was absolutely beautiful, and the sound quality is very high. This is kind of similar to how I think about Sonos. They make very high-quality products, and it's something that once you buy it, I feel like you're going to be a customer of this company for life. And so with the next generation consoles coming out, the demand for these stocks is going to continually increase, especially going into the holiday season. We have seen some very nice increases of their revenue, especially when the pandemic started, because they did take advantage of the stay-at-home movement because people were playing more video games. This is a stock that it's hard to do a lot of research on it because not a very popular stock to talk about. When I've talked about a lot of these other companies, GE gets talked about a lot because it's a major US company, but Turtle Beach kind of flies underneath the radar. From the last earnings report, I could pretty much only find the numbers. There wasn't a lot of commentary about how they felt about the long-term potential of the company. But from that last earnings report, they had an impressive beat when it came to earnings per share and revenue. And while this is a stock that, as I mentioned, does not get a lot of attention, I think it's a great option to buy sooner rather than later, especially going into this next generation of consoles and potential more lockdowns. So let's hop on over to the charts and I'll talk about the final stock on this list, which is going to be Turtle Beach, ticker symbol HEAR. Okay, so here we are finishing off the video with Turtle Beach, ticker symbol HEAR. So it kind of has a whirlwind of a stock history. This is one of these stocks where I would call it cyclical, but cyclical in a way that it follows the gaming sector, because these are very nice headphones that go along with gaming sales. And so when things are going well, like when we have this next generation of consoles, they're probably going to be doing a lot better. And so we have this move up. There was a stock split here. It looks like a 1-to-4, and it fell. And since, let's see, when is this? March of this year, when the pandemic started, this stock has been taking off ever since. It has gone pretty horizontal, so I will draw this as a support right here. And it looks like it recently bounced off of that. We're getting above the 50-day moving average. All of the technicals make me feel very bullish on this, the way that they've had incredible growth from their last earnings report. The only problem I have is this is a stock that does not get a lot of publicity. It's always nice being able to kind of see how your feelings match up against the overall market, because as they always say, the trend is your friend. And so being on the same side as a lot of other investors is always a great sign. But going into here, I was not able to find that much discussion on the stock price, the upside. But from what I'm seeing, the technicals look great. I think going into this next generation of consoles, the market is only going to expand. And similar to what I've said about stuff with Sonos, I think these high quality products are going to do very well because they're not going to be competing with some of the bottom of the barrel products that a lot of these other companies are putting out. So in my mind, Turtle Beach is some of the higher quality products in this sector. And I'm feeling very good about Turtle Beach, ticker symbol HEAR. So overall, that was my list of the 5 cheap stocks to buy under $25. And these has a pretty good variety. You have some stocks that are up significantly. Plug Power is up 660% on the year. Yeah, you have some of probably 2 of my favorite stocks with Zynga and Sonos. You have companies that are kind of beaten down a little bit with GE. It's down 14% on the year, but has a lot of potential when it comes to green energy and the recovery of the aviation sector. And then I finish up the video talking about Turtle Beach, which is a stock that is very good at what they do. And while they don't get a lot of recognition and they don't get discussed a lot, I think it has a lot of great upside potential. And let me know what other stocks under $25 you guys like. So thanks for watching. I appreciate all the support and I will see you in the next video.